Hey, what's up guys, Aaron here. So FTX updates. Will customers be made 100% whole on their claim? Will they actually be made more than 100% whole? I'm going to talk all about that and what that means, along with everything that's come through the court over the last week or so, including some objections to the plan, the IRS having a $24 billion claim that may or may not be ahead of creditors. I'm going to talk about that and what that means for people getting money back. There's some updated financials. I'm going to talk about the difference between last month and this month. Also, we have an order extending FTX's exclusivity. I'm going to explain what that means as well. I'm going to finish off talking about FTX 2.0, the next important dates that are going to be coming into the court this month, December, and also looking into January, and when they expect to release the disclosure statement, solicit votes, which will just get closer and closer to everybody getting crypto back. So if you are an FTX creditor and you want to keep up with everything going on with FTX, make sure to subscribe. I will be coming out with these videos when there are new announcements, and especially when creditors can start getting money back, I will be covering that. So first, starting out talking about the IRS and the debtor's desire to estimate the claims. So the claims asserted by the IRS threaten to halt the debtor's progress and any distribution to customers. This is a really, really big deal. So right now, the IRS claims filed to date are approximately $24 billion. These unsubstantiated placeholder claims, meaning they're not even verified, grossly speculate as to the debtor's theoretical pre-petition tax liabilities, but bear no relation to reality. So the debtors, meaning FTX, they are asking the court to establish a schedule for estimating the claims to $0, because this will help get the plan approved, this will help get the vote approved when the disclosure statement comes out, and this will not postpone disbursements to customers. So next we have somebody from Alvarez and Marsal talking about the IRS claims as well. He says that these are preliminary estimates from the IRS and that the value of these claims have not actually been determined. He says that non-customer claims asserted against FTX total approximately $40 billion, and this IRS claim alone would comprise more than 50% of all claims asserted against the debtors. He says without judiciously estimating the IRS claims, he believes it would be difficult for the debtors to accurately determine appropriate creditor recovery ranges, so how much people are going to be getting back in a disclosure statement or for any other purpose. And the debtors, meaning FTX, would not be able to make meaningful distributions until these IRS claims are liquidated and their priority determined. So by priority, they're talking about subordinating the IRS claims under all the other claims like customer claims. So basically, all the money would go to customers before the IRS would get their $24 billion. And the UCC also supports estimating these claims as well. They say that this is important to ensure that the timeline of these bankruptcy cases is not delayed. So apparently these IRS claims would disrupt that timeline of getting customers their money back. But now we have the IRS saying why they have this $24 billion claim. They say it's from income taxes, employment taxes, and penalties that FTX owes from 2018 through 2022. And they give reasons why estimating the claims, or definitely bringing the claims to zero, is not appropriate. They're saying that FTX hasn't put any evidence forward to say that the IRS's $24 billion claims are incorrect. And FTX says that there was a complete absence of trustworthy financial info, so they can't even give appropriate or accurate financial records. And just claiming that because Ernst & Young prepared the tax returns should not be sufficient to bring the IRS's claims to zero. So this is a big deal and kind of a big issue here. The judge is going to have to rule on this, I believe. Right here, the hearing date is December 13th. So I'm recording this on December 9th. So we have a couple days before the judge will rule on this. Basically, will this get in the way of customer recoveries, or will the IRS claim either be subordinated well below customer claims, or will it just go to zero and possibly deal with that later after the disclosure statement is approved, and again after customers get their money back first? I am hoping that the IRS does not get value ahead of customers. That would not be good. So next we have a law firm that has some objections to the current plan support agreement. Now, this is that document I went through a month ago, just kind of going over the plan. This is not the disclosure statement, which is going to have a lot more detail. This was just more the overview of what FTX wanted to do to make customers whole, or as whole as possible. So FTX MDL, these are plaintiffs that are suing different FTX entities. So essentially they say for over a year, these plaintiffs, these individuals, have actively pursued claims against non-debtor third parties to make FTX customers whole. And there are 33 different actions against these non-debtors, like against the Golden State Warriors, Sequoia Capital, SoftBank, Major League Baseball, Mercedes-Benz Grand Prix, and then you have SBF, Tom Brady, Steph Curry, Shaq, and Shohei Ohtani. So they are objecting, or they don't like this plan term sheet because they are incentivizing you to agree with coercive third-party releases, basically saying, I'm not going to sue other entities if I want to agree to this plan. With the Celsius plan, there was something very, very similar, where in order to agree with the plan, you had to release third parties like the law firms that were representing the debtors and the UCC. So what this law firm is saying is that these plaintiffs should not have to release third parties in order to get benefits from basically accepting the plan. So all that information will come out in the disclosure statement, which should come out actually very soon, which I'll cover a little bit later in this video. So next we have a 20-page document basically asking for a third extension of the exclusive period, or the exclusivity period. Now this is FTX wanting an additional 90 days to get a plan into the docket, and that'll be the plan that people vote on. So in 20 pages, FTX talks about just what a difficult case this is, how much work it is, how crazy it is, and then they go through everything that they've done so far in order to get to where we are right now. And ultimately, the judge did approve this extension of exclusivity, which I'm not surprised about. For the judge not to extend exclusivity, the judge would really have to believe that FTX's lawyers are completely incapable of getting out of Chapter 11. So in the document where the debtors are asking for the extension, they said they are mere days away from filing an amended Chapter 11 plan and the accompanying documents by December 16th, 2023. So that is very, very soon. They're saying in about a week they can actually file an amended plan, which would be really good. So next we have some information on Emergent, which is another company that Sam Bankman-Fried co-founded. And we have the U.S. trustee objecting to compensate the bankruptcy professionals that are not in the United States. So Emergent Technology holds 56 million or so shares of Robinhood stock. So 56 million times 11, that's a lot of money. It's like $500 million, or maybe around $600 million or so. So what happens with this entity's bankruptcy, with Emergent's bankruptcy, does have a great effect on people's recovery. Essentially, Emergent is asking for a $300,000 loan, and the U.S. trustee is saying that the judge should deny this loan because they will have no way to ensure that this loan was spent on reasonable and documented professional fees. This loan has an insane interest rate of 150 to 225%, which I really don't understand why it's so much. And the U.S. trustee said that if this loan is granted, it would open up the door for much larger loans to be approved in the future. So I'm going to talk about the updated bank balances from last month and also the one that came out just recently. And I'm also going to talk about FTX 2.0. We still have 3 bidders that we will know hopefully this month which one wins the bid for FTX, and that should be really, really big for recoveries. And speaking of recoveries and your claim, I do want to talk about the sponsor of this video, which is Claims Market. So what Claims Market is a marketplace. They're a marketplace for bidders to bid on your claim to guarantee you will get the best price available. So if you have a smaller claim, I believe sub $100,000, Cherokee Acquisition will just offer you a price for that claim. For larger claims though, it will go into the marketplace, and then you will have a lot of different bidders bid on your claim to guarantee the highest price. So as the crypto market has been increasing, you can see here that the bid ask has been increasing, and right now it is at the highest it has ever been. So just to clarify what a claim is. So a claim is not how much money you would have right now inside of your account. A claim is based on the day of bankruptcy, which was November 11th, 2022. If you go back to what Bitcoin's price was on November 11th, it is just around $17,000 or so. So for example, if you had an FTX account that had 10 Bitcoin, you would multiply 10 by around $17,000 or $18,000, and that would be your claim amount. So when we're taking a look at what people are buying claims for, it would be around 60% or so of that claim amount. So there are several reasons why people would decide to sell their claim. One is to just get liquidity immediately and then take that money and invest directly into the crypto market. For example, I know people that sold their claim months ago and then they took that money and invested it into altcoins, and they are seeing a much higher return, for example, on an altcoin like Sol. And I also know other people that decided to sell their claim just because they needed the money to do something else with it, whether it's just pay the bills or they had another project they wanted to invest in, because this bankruptcy will take a long time to actually pay out. Next year, maybe, if I had to guess, best case scenario would be end of Q3, maybe early Q4 if everything goes great. I talked about the IRS's claim of $24 billion. That needs to get settled. There's a lot of other things with BlockFi and Voyager that need to get settled. And then possibly the acquisition of FTX from another company. That could take a while to get restarted. There's a lot of reasons why people would want to sell their claim. So if you did have any questions and wanted to reach out to Claims Market, I'll include their website below. You can give them a call or you can send them a message on the website. So taking a look at the bank balances, September 30th, they had $2.477 billion, and now they have a little bit more. So more money has been brought into the estate, which is actually a good thing. On September, the Alameda accounts held $1.462 billion, and recently it's 1.47, so a little bit more there. In September, the .com debtors, so that would be the non-US debtors, held $423 million total, and now they actually hold $559 million. But this is where it gets frustrating, especially if you had a lot of money with FTX. So in September, the total amount they paid to professionals was $317 million, and 1 month later, it's $351 million. So that's around $34 million that was paid to professionals in 1 month. So the longer this goes on, the less money is going to come back to creditors. And that's another reason why people may want to sell their claim. Get money out now, get that into their bank account, and then maybe buy Bitcoin with it, stick it in a hardware wallet. So that is it for the video. If you made it this far, I do want to invite you to join my email list specifically for FTX creditors. This is where when I come out with a new video on FTX, or especially when there's something to do like getting your crypto or there's some action you need to take, I will let you know. I will leave that link below in the description underneath the Claims Market link. As of now, we are waiting for the plan to be submitted. We are also waiting to hear who won the bid, if anybody won the bid for FTX 2.0. There's a lot of talk on social media, ironically similar to Celsius, about will creditors be made 100% whole based on the increased price of crypto and also of the illiquid assets. So with FTX, if Solana keeps going higher and higher, and if they decide to sell their stake in Anthropic, and if they could make creditors 100% whole of their petition US dollar claim amount, which is not how many coins they actually held, remember, it has to do with the price of crypto at the date of bankruptcy filing. If they can make creditors whole, then they may just make creditors whole, and then any excess value would go to the IRS. The same exact thing is happening with Celsius, where there's a potential that creditors will be made whole, and then the illiquid investments and the mining infrastructure and hardware would not go to creditors, they would go to government agencies or possibly other people like those that held equity in Celsius. So that is something that I'm really looking forward to hearing from FTX when they submit their revised plan for reorganization, hopefully this month in December. So that is it, guys. Thanks for watching. If you're an FTX creditor and you want to stay afloat to all of these updates, make sure to subscribe to my station. Till next time, guys, talk with you soon, and bye for now.